What's going on, everyone? I hope you're having a good day. Today I'm gonna be journaling the trades I took for today. Monday, it was Monday, first day of the week, and it was not a too good of a day. I lost about $400, but it's fine. We could just make it back tomorrow. That's my mindset. And this is my P&L right now. As you can see, account balance $50,035.76, and on Friday that was 50,400 and something. So I lost about 400. But it's fine again. Like I said, I can just make it back. Now let's get into the trades. All right, so first I'm just gonna mark out the 9:30, just so you guys know where market opened. That's where market opened right there. This like blue candle up, and now I'm gonna go to the 4 hour and tell you what my bias was. What I had seen was that this fair value gap was getting respected before market had opened, like it hadn't broken through yet. So I was pretty bullish for now. And on top of that, we were in a 4 hour uptrend because you can see we broke structure to the upside right there. This blue candle is a break of structure. Before market open, as you can see, the hourly was in a downtrend, but we were still respecting this fair value gap and all this consolidation area right here. And we made this big move to the upside. So now let's get into my entries and why I entered and what I could have done better, because it was a bad day and I actually did learn a lot from it. All right, so since we were longs, the first thing I did on the first trade was mark out my range, and I waited for a retracement into the 50% area at least to take my long position. And I had also seen that there was this inverse fair value gap right here to the left, which I was waiting to get entered. As soon as that got entered on the 5 minute, I went down to the 1 minute time frame. This is the 5 minute inverse on the 1 minute, and on the 1 minute, I had seen that this bearish fair value gap right here was getting disrespected by this candle. These two candles right here, it got disrespected, and we had also broken structure to the upside on the 1 minute time frame right here. I'll mark it out in red. So I waited for price to re-enter this inverse bearish fair value gap, which it did right here, and then showed me a strong reaction, which it did right here. So on this blue candle, on the closure of this blue candle right here, I entered my stop below this low right here, because if the market wants to go up, it should not be going down to meet that low. And then I made my take profit at the start of this inverse fair value gap right here. And as you can see, the trade did not go well at all. And this was probably the worst trade I've ever taken in my life. And I'll show you why. It was a very silly mistake. So first thing first, on the hourly, we had an hourly sweep right here. This was a liquidity sweep right here. The price went above this high and then went back down. And on the 5 minute time frame, we had a break of structure after that liquidity sweep. And that break of structure happened right here. And so I should have really been looking for shorts, and I would have caught perfect shorts, because I went back as soon as I lost this trade in like real time. I went back and checked my opportunities for shorts, and I would have gotten a perfect shorts, but it's fine. I didn't realize we were in a downtrend because I was too invested in my bias, and that was my mistake right there. So that's why I should have shorted. Instead, I went against the trend and I longed. So I deserved that loss pretty well because I wasn't looking at the higher time frames. But that's fine. I understood the loss, but that's probably one of the worst losses I've ever taken because it was such a silly mistake. Anyways, the second trade, when I realized we were going down, was about right here-ish, when I saw this inverse fair value gap right here, which I got broken and run through many times. But this time it was acting as resistance, because first time it got broken through, it started going down and it was supposed to act as support right here, but it didn't and broke through. So now it started acting as resistance. So then when I went down to the 1 minute, this is the price action on the 1 minute. We entered the 5 minute inverse fair value gap that we saw on the 5 minute before. So the first thing I saw was that we had made this order block right here. I'm gonna mark it out blue just because I like to color code my order blocks blue. We had a perfect reaction off of this order block on this blue candle. We went straight down and took a dump, and I was pretty confident we were going to reach for the pre-market lows that we had made. So what I did was enter right there. My stop was right here, giving this high a little bit of room to breathe in case price wanted to go up and check and wake me out. So I gave it a little bit of room, and my take profit was this line right here, and this line indicated pre-market lows right here at about 917-ish. So I won that trade, and I made back some of the money that I had lost on the first one. So now let's get on the third trade. The third trade was a short in PM session. So I had marked out this range from here to this high right here. That was my range because at first I was longs, because as you can see, we had broken structure on the 5 minute right here and right here. So we were looking pretty bullish. But then we broke structure to the downside on this candle right here. I'll mark it red. So then I started looking for shorts. The candle that we broke structure on also formed us a bearish fair value gap, which was perfect. So then I went down to 1 minute. On the 1 minute, we had the power of 3 going on. This was accumulation. Then we had our manipulation phase right here, a wick into the fair value gap. And then we had our distribution all the way down. I caught the distribution, some of it at least, not all of it obviously, because I'm a scalper. I saw that we went into this fair value gap and showed a strong reaction downside, and I entered on this candle closure right there. And my stop loss was right here, giving my high room to breathe right there. And then my take profit was this low right here. And as you can see, we won the trade pretty much right away, right there on the first candle after the trade was taken. Now let's get into the last and final trade. So now that we were bearish, I marked out this high to this low right here for my range. And ideally, I was waiting for at least 50% of the range. I'm going to delete this one just so it doesn't get confusing, because I could tell it's probably a little confusing. So this is the range, and this is the 50% mark right here. I was waiting for that to get hit before I took shorts at least, but I also obviously was being stupid, and I traded before we got into that. And that was because I had seen an inverse fair value gap right here that was being respected. So on the 5 minute, first we had a bullish fair value gap that got broken through right here, creating an inverse. So now it's reacting, it's acting as resistance. We enter it, so I go on the 1 minute. So I broke 2 rules on this trade. First of all, I should have entered after we had hit the 50% mark, which is the equilibrium. Second, my entry was based off of this order block right here. I saw this order block that was within the inverse fair value gap. I'm gonna mark it out blue. And I saw that price was reacting pretty well off of it, so I entered shorts right here. And usually my rule is that I only take entries on inverse fair value gaps or regular fair value gaps. And so as you can see, I ended up getting stopped out right here, and we took an L. So that was my trading journal for today. I hope you learned something new, and tomorrow I will be posting a new fair value gap video on what a fair value gap is. And I used fair value gaps for the majority of my trades, so I hope you'll tune in, and because it'll be very, very beneficial. I hope you all have a good day, and see you tomorrow. Peace.